Hope everyone is doing well. This is going to be a video over April the 21st. So really big trend day on the daily chart. You can see we reversed most of the past several days. By the way, if anyone knows how to get rid of, TradeStation did an update and now I can't turn off the crosshair whenever I move the mouse. I'm sure, I don't know if it's a permanent feature, but if anyone knows how to turn it off, I would greatly appreciate it, because I'm really not a fan of, well, I don't know why they did this. But anyways, you can see the market tested a 50% pullback. It was basically 4,500. I know it's not an exact price, but to me, close is close enough. It was, let's see, 90 cents, so it's 2-point difference, but basically 4,500. Price gapped up. We had a really big sell-off. Some traders will argue that bulls bought the close of March 29th, bought more maybe above this bar, somewhere down here, looking to get out, break even on the trade. This might increase the odds that we have a second leg down. Maybe we test down to here. It'll depend on what the follow-through gets. The weekly chart tomorrow, so broke above it, turned down. The bears, they want to get back down to here, maybe close on its low. I don't know. I don't know how I feel about this crosshair. It's really distracting, which that's one reason I don't like it. But anyways, 5-minute chart. I guess it's easier to do these videos though. So here's yesterday's high. Gapped up far above it. On the open, 20% chance it's the lower high of the day. So some bulls will buy, but far above the moving average, breaking above yesterday's highs. Plus, you're also at, the daily chart. You're at 4,500. So that is around a 50% pullback on the daily chart. Not a great area to buy. Big bear bar, but again, bad bull, bad buy, bad sell. Probably going to go sideways. Bears, second entry short. Some bears will sell, stop up here. Some bears just will sell the close and front run this bar sideways. Big bear bar, another bear bar. Is it a trading range? It could be. Now we have 3 or 4 consecutive bear bars. It's probably going to be a bear trend or a trading range. However, if you're selling down here, you may get a deep pullback. So some traders will sell, but they have to be prepared for a possible deep pullback and test of the open of the day. Hesitation. So some bears will sell, disappointed, get out here. So, maybe they sell it, let's see, 90.5. The low of this bar is 90.25. There's no way that's right. 90.5, the low is 87.75. So they sold, made 3 points. Deep pullback, so close the gap here. Probably going to go sideways, but tight enough channel down. Probably not a good buy. So some traders will look to buy a pullback. Other traders will just wait to buy. Consecutive bear bars still have a gap here, so probably have to close this gap. 3 consecutive bear bars. You can call it a wedge bottom. 1, 2, 3. So here's the wedge. We're getting a bear breakout of the wedge, closing back in today's range. You have to be open to the possibility of a measuring gap from here to here, taking you down to here and taking you back to yesterday's close. Follow through bar, so it is sell the close, maybe stop up here or here. Whoops. Lost my place. There we go. Bull bar, but after 4 consecutive bear bars, probably sellers above. Bears are going to try to keep this gap open. The bulls want to close it. And, couldn't really close it. Now we have a second entry short, low 1, low 2, doji. And the bears, the bulls really do want a wedge bottom, so they're hoping for wedge 1, 2, 3, failed breakout of down here and test back up. However, they have an open gap, so you really have to be worried if you're a bull. That's worrisome. You have scaling bulls buying lower. So what one strategy that they would do is they'll buy here, buy more lower, get out, break even. That's pretty far of a stop, but some traders, maybe they buy this low, scaling lower. But after you see this big bear bar, a lot of traders just would get out and wait for a couple legs down. So the market's deciding trading range and a test back up to here, or bear trend and a bear breakout. And you can see right here, if you are buying lows, a lot of bears would get nervous here. Some bears would scalp out during this bar up here, but a lot would get nervous and probably get out below this bar. It's too many bear bars after a gap, too much risk of this, and even though this looks like a leg in a trading range, the channel's tight. So bear bar, bear bar, bear bar, bear bar. Bulls can't make money either. So bulls haven't made money in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars. So it's been an hour since bulls have made money. That's a really big bear bar on a 60-minute chart. Another bear bar. So it's sell to close. Probably going lower. Doji. Still sell to close. Probably sellers above. Too early to buy. You can call it a parabolic wedge. 1, pullback 2, pullback 3. And again, I apologize if I'll figure out how to turn this crosshair off because it's really annoying. Doji, not a great buy. Probably sellers above. And big bear bar. Consecutive sell climaxes at this point. A lot of bulls would get out. A lot of bears would get out. Bulls will start to look to buy, but the odds are will go sideways. So if you're buying here, some traders will buy, betting that we're going to get to here. But again, this is a very parabolic and tight channel, so it's hard to be buying here, and for that reason. And arguably some bulls, they buy, scalp out, but I wouldn't be, when you're in a micro channel like this, it's not a great time to buy. And as you can see, we're just going lower. Now this was a pretty exceptional day. And at this point, when you're this far away from the moving average, this is a gift. So if you are short, even this, it'd be, it looks easy at the end of the day. You would sell and just stay short. But the problem is, in real time, if you're selling close that stop up here, you're back in this range. The odds are you're going to pull back. So it's very tempting to just want to, kind of like down here. That's not really the same, but it's tempting to want to take your profits and look to sell higher. And now you're down here, but you still want to take, now it's more climactic. So you want to take profits, you want to sell higher. And you don't get the chance here. So going sideways, I'm finally going to get to sell a pullback. And it just goes lower. And you're thinking, okay, now it's going to pull back, so I'll set a limit order somewhere up here, scaling higher, and I'll make money. So I'll put a limit order, somewhere up here by the moving average, and it just goes lower. And then the problem here is now it's close to 12 o'clock. It's going even lower. And you're thinking, gee, this is so climactic. And now we get a big bear bar. And then we get this, and you're thinking, oh, there's no way I can't sell anymore. And price goes sideways, goes further down, and just keeps trending down. So, even here, it just doesn't look like it can go that much lower. So it's easy to say, I would trail a stop, bear breakout, you get out here, look, sell again here. But that's really, really difficult. And if anyone can get short and just trail a stop, that's phenomenal. Just look at the daily chart. Here's the range of today. So let's look at how many bars. Let's find the last time the bar was from here to here. So the last bar I can find is March the 7th. Let's go to March 7th real quick, just out of curiosity. Whoops. For those of you that have TradeStation, you can type on the command line .ld and then the date, and it'll take you to whatever day you want to go to. Just a fun little shortcut for you. So here's March the 7th, kind of a similar day. This day, though, went more sideways and just kept selling off. So again, very difficult to stay short. Consecutive sell to close, bull bar, another bull bar, sell closes, tight channel, consecutive sell climaxes, two-legged rally, bear breakout, deep pullback, more bear bars, sideways, and sell off. So it's still difficult. Here, it just kind of drifts off faster, sells off quicker, doesn't go sideways as long. But again, it's a difficult day. I would really focus mostly on the key part with days like today is just to not bet on regression in the moving average. Don't be buying down here betting on a pullback, because you're gonna get chewed. You're gonna lose too much money. It's just that simple. So look to sell pullbacks. Sell, and if you can't, then just don't do anything on this kind of day. The risk is big, the market's moving fast, and it's easy to get chewed up. I would focus more on these days. Figure out how to understand these days really well in these days, because this is most days. This is a little bit of an exception, but I don't think a lot of people don't like these days. I mean, they're great if you can get short and swing trade it, but it's not as, a lot of scalpers, even Al would say that he likes sideways movement, as long as the range is big. Yeah, I had to pause the video for a second, so I forgot what I was talking about. But what I would focus on really is trading ranges and understanding risk reward. And this is for a whole nother video, and probably we could talk hours about it. But if you're buying up here and your stop's down here, it's a bad risk reward. And bad risk reward really just means 1-to-1 risk reward. It doesn't mean it's a bad trade. Here, this is a little different, but a 60% trade, if you think about the trader's equation in some Al's videos, bad risk reward is a 1-to-1 risk reward. Great risk reward is 2 or 3 times your risk. Bad risk reward just means you need high probability in order to make it work. So it's really, really important to understand that in a trading range, the odds are the market's going to fail. It failed here, here, here. It's going to fail up here probably. So if your risk is big and you get a breakout attempt that starts to fail, traders are quick to get out. Down here, you have a lot of lows. If the market starts to stall, lots of traders are going to look to buy back shorts. So as I was saying, traders, you can sell down here, stop up here, but the problem is risk reward's bad. So there might be a 60% chance of selling this close and a measure move down. But now the probability is not 60%, maybe it's 57%. So it changes with every bar. And now, it keeps going down, and then you get a bull bar. So the point is, if you're using the wide stop, you have to know when to get out. And you can sell here, trail your stop, maybe wedge bottom, 1, 2, 3, bear breakout of the wedge, so channel, and then you get a bear breakout of this low, reversal up, even though it's micro channel. There's only, I think about it like this. If you had to sell above this bar, where's the logical stop? Because selling this close or selling above here, there's really no difference. Just from a simple, because your entry price is kind of irrelevant. So if you're short here, you have a couple choices. You could put your stop 1 tick above the bar. You could use a stop up here. You could use a stop up here. Here's the problem though. If I put a stop up here, and there's my entry price, here's my target, here's my stop. My target's all the way down there. What's the odds that price is going to go all the way down to here before it goes to here? Well, I think the opposite. I think it's more likely to go somewhere up in here before it just go down here. So if anything, I'd rather do the opposite. I'd rather buy and look to buy more somewhere down here. That means the better alternative is to buy this bar. And you can buy to go long, you can buy to get out of shorts. So you're better off tightening your stop. Or maybe it's the math works, but maybe you put your stop 1 tick above this bar. So then you get filled. Anyways, but you get the point. Same thing down here. Maybe the first reversal up's going to fail. Then here, where's your stop choices? Well, you can put your stop if you're short, you can get out above this bar. You can get out above this lower high. You can get out, who knows, above the moving average. There's many choices. So I hope this video helps.